Ladies and gentlemen, good day and welcome to Q1 FY26 earnings conference call of Alembic Pharmaceuticals Limited. We have with us today Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Executive Director, Mr. G. Krishnan, CFO, Mr. Ajay Kumar Desai, Senior Vice President Finance. As a reminder, this conference call is only for analysts, institutional investors. All participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. R.K. Baheti. Thank you, and over to you, sir.
Thank you. Am I audible?
Yes, sir. Please go ahead.
Yeah. Thank you, everyone, for joining our first quarter 26 conference call. I'm very happy to introduce my colleague, Mr. G. Krishnan, who has joined us as our CFO, effective 7th of July 2025. And I'm pleased to hand it over to him for the opening remarks. Krishnan.
Thank you. Thank you, Mr. Baheti, for the introduction. Good afternoon, everyone. This is my first earnings call and interaction with all of you as the CFO of Alembic. I'm truly pleased to be here, and it's an honor to join a company with such a rich legacy of innovation, operational excellence, and strong stakeholder trust. Over the past few weeks, I've been spending time engaging with various teams, understanding our business levers, appreciating the disciplined approach that the company brings to execution. So I look forward to working very closely with the leadership team to continue driving sustainable growth, operational efficiency, and long-term value creation. So now let me briefly take you through the numbers for the quarter ended June 30, 2025. We delivered a good start to the financial year. Total revenue for the quarter grew by 10% year-on-year to 1,711 crores. The growth was broad-based across businesses despite pricing pressure in US generics and API. Gross margin, that is net of material cost, improved from 74.8% in Q1 last year to 76.2% in Q1 this year, primarily driven by product mix, and we also embarked on cost improvement programs in manufacturing operations that drove the margin uplift. EBITDA margins before R&D expenses were at 25% of revenue at 424 crores for the quarter. It grew by about 23% over the last year, reflecting a revenue growth, better gross margins, and improved utilization in some of the facilities that were launched last year. R&D expenses increased by 26% compared to the previous year to 145 crores. And this is in line with the full year guidance that we gave at the beginning of this year, which is supposed to be around 600 to 650 crores in R&D expense. So EBITDA after R&D expense was at 288 crores, which is 17% of revenue and grew by 20% year-on-year. Profit before tax grew by 21% to 191 crores. Net profit growth was at 15% to 154 crores. EPS for the quarter stands at 7.85 rupees per share compared to 6.84 rupees for the previous year. Working capital as of June was broadly similar to what we had in March. We had better collections, which was partially offset by increase in inventory in line with our strategic approach on managing working capital. Borrowings, the gross debt was at 1185 crores, while net debt stands at 967 crores for the quarter as of June 30th. With this, I have given a broad overview of the financials, and I'll now request Shaunak to take you through the India branded business. Over to you, Shaunak.
Yeah, good afternoon, everyone. I think this quarter on India, we delivered with only a 5% year-on-year growth, with reaching 599 crores in revenue for the quarter. There are some specialty areas which have shown some momentum, but I think in terms of building a more robust, sustainable business to deliver strong double-digit growth going forward. There have been some challenges which we tried to tackle, including adjusting some underlying factors as well as having a far more vigorous and robust mechanism of what we bill, how we capture in-market inventory, also along with that, a more rigorous alignment to UCMP norms that we have to follow as an industry. As a part of these, we also understand that certain execution levels were not up to standard, and we are working on those and trying to move people, but getting 7,000 plus people to move overnight does take a challenge, but we are definitely working on it. We have a very clear idea on where the gaps and what we need to do to get back into a double-digit kind of growth number that we have promised for the year. We are working on it on a daily basis, and I'm sure that very soon we should start seeing some of these start flesh out in terms of our growth numbers. Highlight, obviously, animal healthcare continues to do well because of our robust execution in that area, and we hope to match the rest of the product categories to that level, that standard of growth going forward. Thank you. I'll pass it on to Faral now. Thank you.
Thanks, Shana. I'm pleased to present the performance of the first quarter of FY26 for the international business and the API. We began the first quarter on a strong note. It was driven by a 21% increase in the rest of the world generics, reflecting a strategic expansion and execution across the geographies. Despite ongoing pricing pressure in the US, our US business also grew by 13%, supported by volume gains. We launched 4 products in the market, and we also picked up market share in some other products. We expect the US to continue growing in the next couple of quarters on the back of some interesting launches as well. The API business was flat. I've said that it's been a little muted due to some issues due to data availability in India, and was flat at 261 crores for the quarter. As we ramp up the utilization of our new manufacturing facilities and continue to drive cost optimization initiatives, we expect to benefit with improved operating leverage, which will help our margins as well. We filed 2 ANDAs during the quarter. We received 6 approvals and launched 4 products in the US. We expect to launch 4 to 5 more products in Q2 of this year as well. With that, I will open the floor for Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Tushar Manudhane from Motilal Oswal. Please go ahead, sir.
Am I audible?
Yeah.
Yes, sir.
Just from domestic formulation, while there was an underperformance, but if you could throw some light on specialty segment in particular, where after many quarters we've seen some muted performance for this quarter. That was first. And secondly, in terms of you highlighted rebuilding the team, if you could just elaborate in terms of what exactly are we trying to do? Thanks.
Yeah. So I think what I was trying to allude to is that the way we build sales, we are trying to keep it far more strict compared to what the industry norm is, as well as where we used to be in the past. So in terms of our primaries versus secondaries, we also implemented a mechanism to capture secondaries from the market automatically. So we have a better control on what our inventory levels in market. So some of that also impacted our sales in Q1. But largely, like I said, I think we have to focus more on execution, and we're more committed to driving underlying growth through our prescribers and prescriptions for a sales that is more sustainable in the future.
Is this impacting a particular therapy, or this has been across the therapies within?
No, this is across the therapies. This is across the therapies. It's for the whole organization, so there's no specific therapy which will have it. But like I said, we're quite confident. We have full visibility on what's going on, and we're quite confident of where the gaps are and what we need to do to address these.
Okay. And sir, acute has been better. So any particular attributes to this?
I think acute were coming off. I think if you know the history, I think we came off a very high base, and then last year was a very market was extremely low base for us. Sorry, it was extremely bad. So I think from a base point of view, there is some advantage there. But again, like I said, I think little better execution on the acute side also, along with some better stability in the market, has allowed us to do this.
Got it, sir. That's it from my side. We'll come back to you.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Services. Please go ahead, ma'am.
Yeah, thanks for the opportunity. I have two questions. First on the peptide front. So now that we have a dedicated block which is commissioned and correct me if I'm wrong, we have allocated almost 35% of R&D towards this peptide and complex injectables. I just wanted to know if you could update us on the timelines for the first peptide filing. Also, any update on filing for semaglutide and ROW markets? And like you had indicated about tirzepatide, so we are planning for day one launch in US. So any filings or any progress on that front?
So I think we haven't said that we've allocated 35% of R&D to peptides. I think that's not what we've said ever. But yeah, peptides is something that we are looking and pursuing. What I have said is that we were late for the first peptide, which is semaglutide for the US market. So we won't be there in the first wave of launch for semaglutide. Tirzepatide, which is the second one, Mounjaro, is something that we're looking at, and the follow-on GLP-1s that we're doing. Apart from that, we have other peptides in the system as well that we are working on, which are going into some of the complex injectables.
Yeah, understood. It's like you mentioned, we are late for semaglutide, but we were aiming for ROW markets.
Yes, so we are looking at some of the ROW markets for semaglutide. As I said, we were a little late for the first wave markets. After the second wave markets is something that we will pursue.
Any specific, if you can name which ROW segment are you looking at, which market?
I would not like to name them right now because I just want to get the filings done and ensure that the regulatory strategy is in place before we give a comment on that.
Okay. And my second question is, you had earlier indicated that we do have limited competition injectable launches, which will probably start contributing by FY27. So any launch expected in FY26? And if you can elaborate more on the segments, are they niche segment or any complex dosage forms?
Yeah, so we have a few complex injectable filings that we will get. One approval that we did receive, it's in the public domain, is on the doxorubicin product. So like that, we'll get a few more as we go along, slowly as we keep getting approvals.
Okay, understood. Thank you.
Thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is again on India business. So, Shaunak, you mentioned you are clear about the gaps and you are working towards fulfilling those gaps, etc. So, according to you, how long it will take before you can catch up with the market growth rate first and then may outpace the IPM growth? So, approximately, this will be how many years of effort according to you?
No, I think what we're talking about is not years. I think we're talking in months in terms of time frames.
So, when do you see your India growth going back to, say, a market level growth?
I can't give you exact comment, but like I've said, I think some of these things, India is a big country. I think executing in the country is challenging. I think to get to 100% of execution for every district in the country is that we cover. I think that I can't give you exact time frame, but like I said, I think it's a matter of months till we start seeing double-digit growth and meeting or matching market growth.
Okay, but you're confident about the steps which you might have outlined and which will help you to really pick up from here on?
Yes, so we've benchmarked the couple of the top 2-3 companies which we feel have set an example of this, and a lot of the work we've done is based on those benchmarks. And in terms of companies which we feel are UCMP compliant and have been able to deliver strong growth over the last few years. So we have benchmarked those kind of companies, and we have worked on operations to ensure that we meet those benchmarks, and we can get the team aligned to drive double-digit growth.
Okay. And on the people's part, you don't need to add any more
No,
sales
we don't need to add any more people.
Okay. So it's basically more execution, more expansion on
Yeah,
current.
it's more about better execution, like I said, in every district and every headquarter we cover in the country. So.
Okay, that's helpful. My second question is on international business. So first on the US, Pranav, just want to understand, you have seen, pick up in the US sales despite price erosion, which you mentioned due to volume expansion, etc. So a couple of your peers have mentioned that in the US they are seeing channels destocking a bit. I think in anticipation of this tariff, etc., they were stocking up and now it's getting unwind. So do you see the similar situation?
No, we haven't seen as yet. Either channel stocking or destocking, we haven't seen because it's been so uncertain, right? It's sometimes we're talking about tariffs and there's no tariffs and there's tariffs. So we have not seen that, at least from our buyers, we haven't seen it so far. I think where we saw growth in the US is, as I said, we launched 4 products. Apart from that, some of the other older products where there was some uncertainty in the market is where the buyers came to us, and we managed to pick up accounts at a pricing that worked for us. So.
Okay. And going ahead also, while the uncertainty remains on the tariff part, you will be focusing more on new launches, right, to see pickup from current levels.
Exactly, I think, right? So on the tariffs, there's nothing you can do about the tariffs. I have a theory that it's going to be tough for pharma, right? Because what's going to happen is that the issue is going to be on the high volume wafer thin margin products where you will have an issue with the tariffs. And by putting tariffs there, those, because of wafer thin margins, they're not going to be viable to manufacture in the US as well. So that's the catch-22 that's going to come. As for us, we're continuing with what we do, just trying to get whatever products we can, work on better supply chain, work on being a better supply chain partner. And as we get a little more complex and a little more injectable business, that will help a little bit as well.
Sure. And some of your peers are again focusing on increasing a bit of manufacturing footprints in the US as a risk management strategy. Any thoughts from your side?
No. So that's something that I'm not okay. So let's put it this way. Increasing manufacturing footprint in the US just because of tariffs is something, in my opinion, not something that we're considering. If there was a strategy based on US business or US government business or something that you can get at a better pricing, then we would look at a manufacturing strategy in the US. But purely for a de-risk perspective, it doesn't make sense to allocate so much capital for setting up manufacturing in the US. And again, if there's going to be more generic pricing and competition. So we are not approaching it from that angle.
Okay, that's helpful. And my last question is on your API business. So you mentioned pricing erosion is something which impacted the performance during the quarter. So it is something specific to your portfolio, or it is an industry-wide phenomena which you are observing?
No, it's a good question. I think it's an industry-wide phenomena, and it's not the quarter. I think it's over the last 6-7 quarters. If you see, our API business has been quite muted and it's degrown because the API business, our API business over the last decade or so has been a fantastic business, very high margin business, very high EBITDA business for us. And so what's happening is, because again, we had a good supply chain record, good compliance, you could get better pricing in the market. Now with this data that is getting leaked through Chinese traders, everyone knows what price is selling at what buyer, to which buyer, and that's really caused a lot of upheaval and a lot of uncertainty in terms of our pricing.
Sorry, Pranav, what is this update from Chinese players you mentioned? Can you elaborate a bit?
Yeah, so as I mentioned, there's a lot of data that is leaked by Chinese traders who give data about all exports from India. And I think that is what is causing this. Actually, it's not just pharma, it's every sector they have data from, and that is what is causing this issue in the API business.
And how do you see this business in coming quarters? Maybe in near term, we can see similar trends to continue, but any scope of improvement?
Of course, I think what's happened is we will continue doing well. See, it's just the pricing that is coming to the issue, right? The pricing is coming and we may have lost some accounts, but the inherent business and our strength of being a good supply chain partner, development partner, that continues, right? So you'll see it. I think it's for a couple of quarters it'll be tough, and then slowly we'll start growing again from there.
Okay, sure. Very helpful comments. Thank you. I'll get back into queue.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Forum Parekh from Bank of Baroda Capital Market. Please go ahead, sir.
Yeah, thank you for the opportunity. My first question is on ROW market. We have been doing very well in this region. So, is it possible for the management to give us detailed, idea? What's going right in this region?
Thank you. Yes, the ROW part of our business has been a good business for us. If you see over the last decade or so, the CAGR has been well over 15%, almost 20-odd%, if I'm not mistaken. So it's been a very good business. I think it's no rocket science per se. I think just a clarity and strategy in terms of what markets we wanted to go. Number two, an execution in terms of supply chain. At the heart of everything, what's worked for us has been the supply chain execution. I think some good supply chain execution has led us to good partners who trust us with the products, and we've been able to supply and grow in these markets with the better margin profile.
So, this kind of growth rate, is it sustainable going forward also?
So, Q1, if you see Q1 of last year was a little muted quarter for the ROW business. That's why this quarter it looks much higher. But having said that, I expect for the full year we will grow. We will grow close to about 10-15%, at least in the ROW market.
Okay. And my second question is on the raw material cost contribution, which has come quite low in this quarter, which has aided in gross margins. So going forward, how should we look? Should we look at this contribution as the base or a benchmark and go about it? How should we look at it?
So see, raw material cost is a combination of product mix and how things happen between API and generics, right? So I think it'll be anywhere between 25 to 30%, depending on which quarter we're looking at and how the product mix is going on, right? And historically we've been in that range. I think we'll continue to be in that range going forward as well.
Okay. And lastly, on the ETR, if you can just guide us for full year ETR rate.
So I think current quarter we are at around 19%. I think we'll be in the range of 17 to 18% overall for the full year.
Sure, that's helpful. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Mr. Sanjay from Renaissance Investment Managers. Please go ahead, sir.
For the opportunity, the question is the US generic business. Excluding the oral solids, you've got about 70 ANDAs across derma, ophthal, and injectables. For these 70 ANDAs, how many products have been launched? And broadly, if you can indicate what would be the contribution to your US revenues?
So the US revenues as a total from all our business is about 29% of business. In terms of the products that launch, Nilesh, can you just, I don't have the data with me, can you just mention?
I'm referring to only these, the 70 ANDAs across non-oral solids.
Oh, non-oral solids. Okay, sorry.
Yeah.
So how much? We don't give a revenue breakup between the non-oral solids and OSD.
We'll get back to you offline. We don't have it handy.
Okay. And could you indicate how many products have been launched out of these 70 so far?
a breakup by dosage form. We can get back to you later on this one.
Okay. Okay. Sure. And my second question is, I probably missed the exact number. Can you just indicate your gross debt and net debt at the end of the quarter?
Gross debt was at 1185 crores as of June, and net debt was at 967 crores.
967. Okay. Thank you so much.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura Securities. Please go ahead.
Yeah, hi. Thanks for taking my question and good afternoon. Pranav, you mentioned about the tariff and its impact. I mean, it looks it's inevitable. I'm just wondering, let's say if you have a 10% tariff tomorrow or 20% or even higher, how do you think the industry would be reacting? And I'm wondering for Alembic, given your size of around $250 million with a wide basket of products, how in that scenario, you think Alembic will be impacted? If you can just, take me through your thoughts.
There's too many variables here, and it's very tough to say. I think we have to be very clear. As I said, you have to have clarity of thought what we want to do as a company. As I said earlier to the last comment about the tariffs earlier, that manufacturing in the US, for me, right now, is not making sense. I don't see it because I don't do large capital allocation for setting up a manufacturing in the US for the generic business, which we're already seeing pricing pressure. It really depends on what kind of tariffs come and what kind of pass-through you can do. Now, the pass-through that will go to the end consumer, it's not up to me. I would like to pass on everything. It really depends on what the competition also does. If everybody else says that, no, we will work on wafer thin margins or we'll reduce our margins on the supplied losses, then the business would get dumped. Then the business would, of course, be unviable. As far as we are concerned, we are cognizant of our bottom line. And if we feel that it doesn't make sense to manufacture for the US, then we will walk away from some of the businesses if need be.
Mm-hmm. And currently, how would you think about your profitability, let's say pre or post R&D at the scale that you're operating?
So our profitability right now across the ROW and the US is pretty good at a pre-R&D level. Of course, there's a higher R&D allocation for the US market. So at a pre-R&D level with very healthy margins. At a post-R&D level also, the US is a decent margin. The only thing that drags down the margins for the US that are put with the facility is the facilities which are not fully utilized. So as we go along, as we have more utilization from these facilities, that will aid the margins as well. But at a gross margin and at a net level, even after R&D, margins are pretty good for all the businesses.
Okay. And so there is no discussion on tariff with the trade and channel yet, is it? Or is the industry discussing any feedback you're getting or?
Nothing. I think it'll come down to who can negotiate or what kind of deals you can do. But as I said, if everybody else decides to take the brunt of the tariff hike, then the trade is not going to accept one company going. So there's a lot of conversations, but I think everyone's still it's a lot of variables there right now.
Okay. Thank you, and all the best. Thanks.
Thank you. The next question is from the line of Mr. Tushar from Motilal Oswal. Please go ahead, sir.
Thanks. So just on the US generic side, where the launches have helped us, track $62 million per quarter. But how to think about this given that, we have a good pace of launches in the coming quarters as well?
Yeah. So I think for the US business, the quarter one was a good quarter. Moving forward, Q2 also is going to be an interesting quarter, Q2, Q3, and Q4. And I expect to grow by at least 10% in the US business in across in every quarter at least. We have a few interesting launches that are going to happen in the second quarter as well. One just got launched, the big product Entresto. There is a fair bit of generic competition. So I think we should do okay in that product. And the US this year should have good growth.
So specifically for Entresto, as I understand, the API, we don't have API in-house, and many other players, have.
No, we do.
Multiple.
We have in-house API.
Okay. That's interesting. So any price erosion we would have seen in this product till now? If you could share some.
Entresto?
Yeah.
So there is price erosion, of course, because it was an innovative product and generics have gotten a thing. It just still the launch just happened a couple of weeks back, but yeah, there is a fair bit of price erosion, but it's still a decent market. Let's see over the next few weeks how it shapes up with more entrants come in and they try picking up business.
Got it. Thanks for this.
Thank you. The next question is from the line of Gagan Thareja from Ask Investment Managers. Please go ahead.
Yeah, good evening. So the first question is pertaining to, the tariffs. First of all, there's some, at least in my mind, there's some confusion as to whether the 25% duties tariffs that were announced, do they exempt pharmaceuticals? In your assessment, do they exempt pharmaceuticals?
Yes, I think as for what we've seen, currently it seems that pharmaceuticals is exempted.
Okay. And therefore, are you saying that, it's only through the Section 232 that subsequently, tariffs will be announced for pharmaceuticals?
Exactly.
Okay. Because the second one is, under the HTS classification for tariffs, the determination of the country of origin, is dependent upon where the substantial transformation of the product happens. So if the API, comes from China, or if you have a multi-API product where, significant share is coming from China and some is coming from India, does it mean that the tariffs on the product will depend upon the source of API? And therefore, again, some degree of complexity there?
I don't think so. Because if that was there, made right now in the US. See, so anyway, right now, in terms of generics, there's just not enough capacity, forget in the US, all over the world, to deal with the formulation generic volumes. Now, if you put the API into it, then where are you going to get the product from? API, so there's almost nothing, no API manufacturing, generic API manufacturing facilities in the US. There's a dime a dozen. I mean, so hardly you can count them on your fingers, So I don't believe that API will come. If that comes, it'll be catastrophic.
No. My point is, while that itself is a question by itself, my question is that, let's say you have a product, manufactured by an Indian company which sources its API from China. Okay. Under the tariff, HTS tariff code, the tariff is, determined by the country where the substantial transformation of the product has happened. In which case, if, the API is sourced from China or the final formulation, it would be a reasonable inference that substantial transformation has happened in China, and therefore the formulation tariffs applicable to China are applicable on the product, or is it the formulation tariffs applicable to India which are applicable on the product?
I think from India only, not China.
Okay. All right, sir. In terms of your US business, can you perhaps give some idea as to how do you see the full year panning out this year, especially given in context of the number of approvals you've had and as they scale up going ahead?
Yeah, so I expect the US business to grow for the full year anywhere between 10 to 15%. We have I think we've launched about 4 products in the US in Q1. I think and the rest of the year we'll launch another 10 to 15 products. We should have a fair bit of launches in the US market, and we'll pick up some share, we believe. So I believe about 10 to 15% is what I'd expect for the US business to grow this year.
Okay. And how should we think of the India business? I mean, the first quarter you indicated, was a bit subpar, and you had some constraints around the UPCMP. Is the whole year going to be a bit impacted by these changes, or you think recovery is in the works in the next quarter or two?
No, it's like I said, it's a part of the process. It's not a year-long thing. It's not a yearly thing. And like I said, it's a matter of months because we're working on it SOS to resolve it. So I think, like I said, our time frames are in matter of months, not in the years. So like I said, that's what I said.
And finally, sir, can you give the gross debt numbers and also how, you see the debt sort of panning out through the year and at roughly what numbers you could close the year?
So you meant on gross debt?
Yes.
So gross debt was at 1185 crores, I mentioned earlier. Net debt was at 967 crores. So, this is still close to what we had at end of March in terms of the gross debt. So we see that, of course, the debt movement will depend on how the working capital ranges during the quarter, right? So we'll be mindful of what we need to borrow going forward.
But is it reasonable to presume that going ahead, the debt can reduce substantially in the year?
Maybe we discuss that in the next quarter. We'll see how the trajectory of business growth is and what is the need for investing in working capital in the next few quarters, considering the dynamics in U.S. market specifically, right? So we need to wait and watch. I'll hold my comment on how the net debt will move. Whether there is going to be a drastic reduction or not, we'll get to see in the next couple of quarters.
Okay. Thank you. I'll get back in the queue. Thanks for taking the questions.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi. Thank you for the opportunity again. Pranav, you mentioned in some of the plants, utilization is right now very, low. So at the network level, at what utilization your US plants are operating at, and how do you see this moving?
So, we don't give plant-wise utilization, but just to give you a flavor, the formulation plant F1, which is our largest plant, that's at practical peak capacity, right? So at a practical capacity, it's running at full capacity. The API plants are running pretty full as well. It's the injectable derm, and the onco and the new OSD facility, which is actually even the new OSD facility is ramping up now, and that's at a decent capacity utilization. It's just the injectable and the onco and the derm facility, which are a little lower in terms of capacity utilization.
Okay. And then my second question is, during the quarter, your depreciation expense moved up notably. So is this the new base to look for?
So in Q1 of this year, we commissioned our Indore plant, the new manufacturing facility for branded business, and that has added to the depreciation cost.
Okay. So current quarter represents the new base to look for the depreciation.
Yeah, more or less.
Now okay.
That's right.
Okay. Thank you. Yeah, that's
but we also guided for a capex of about 400 crores at the beginning of the year. So you may have to, of course, it will not happen all in one quarter. So as and when it gets capitalized, that will also flow through into the depreciation.
Okay. Can you remind us where is this capex getting deployed?
So it is, like we said in the last quarter call as well, most of the projects have got completed in terms of capacity augmentation. This capex is going to be more towards maintenance, replacement, and debottlenecking wherever required.
Okay. So majorly for maintenance and maybe very little towards the expansion or any upgrade part.
Yes, and yes, that's right. Yeah.
Okay. That's helpful. Thank you.
Thank you. With this, that was the last question for this session. I would now like to hand over the conference over to Mr. G. Krishnan for closing comments.
So thank you for all the questions. I hope you got clarity on our performance relating to quarter one. And in case there are further follow-up questions, please do reach out to the team. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.